Hey there, traders. This is Christian from Tribeca Trade Group with your end of day recap for Tuesday. And sorry, the recap going out a little bit later, and I'm listening to CNBC in the background, Fast Money, and they've just talked about banks for about 15 minutes. So I get it. There's been a lot of earnings out. Goldman and Bank of America was out, and they're still making cases for the banks. I just would not really want to be in that group at all. I don't know why they're belaboring over the banks so much. I'll just look at an XLF chart. No, thank you. Sure, there's support here. Maybe it could bounce here. But I just don't see first. There's just no reason to be in these things right now, other than maybe they go a little bit lower and it maybe get more cheap. Maybe there's some support here, but when you look at the possibility of rate hikes, that seems to be lessening day by day, right? You got to realize what are really strong markets for the banks when there's going to be more rate hikes than less. We don't know if we're really going to be getting too many more of those with a lot of global tensions. And it looks like the economics that have been coming out over the last couple of weeks have not been that strong. So you look at inflation, CPI came out, missed badly, PPI downticked. So inflation is not there either. So we may not be getting a lot more rate hikes. That's not going to be good for the banks. And then look at TLT today. TLT is rallying hard. So they didn't even mention that. They talked about trading profits, and I get it. They talked about some of the components of their profit models, which we're talking about with Goldman Sachs, having a bad day and missing pretty bad on their quarter. They still like them. I don't really get why they would even want to touch them here with bonds rallying. Again, a steeper yield curve is good for the banks, and what's happening now is the yield curve is starting to flatten again. The long bonds are starting to rally and rates are dropping. That's not a good environment for the banks. So regardless of last quarter where they made their money, it looks like some of them made some money in trading. How are they going to make money going forward? I would rather not be in this group at all. Can the market rally without the banks going, flying through, flying up and to the right? Sure. I think there's other things, there's other places to be in the market besides the banks. It's just not a conducive. This is not a good environment where it was a couple months ago when bonds were selling off hard and there was expectations of more rate hikes than there is now. Sure, then there's catalyst, but it doesn't make any sense to me. So sorry to belabor the point, but I'm just listening to what's going on on TV, and I get it. It's an entertainment channel. So S&P today, we finished down 29 basis points. Really, we just kind of chopped around all day today. If you don't have the value areas on your screens, you're doing yourself a disservice, because this is basically, we see these every day. I do write these levels up in the morning, but the 5-minute value area, that's the whole from where we went to from the beginning of the day. We didn't want to rally. We had one bar out of here, came right back in. Once we're in value, you basically have to know where your resistance is for the day. You know where your support is. If you break out, great. But for the time being, you could even see this bar, which we signaled today in the trading room, which I didn't want to short. There's no reason to short today because we had support right there. And even when this bar before it even closed, I said, we might be breaking value for the day. Nope, hammer bar right on the bottom of value, right where that support level is, and then we got a little bit of a bid back to the market at the end of the day. Look at the two candles, mark the value areas. Again, I don't draw these value areas; they're completely drawn ahead of time. Basically, what they are doing again is just capturing volume at price, where most of the buying and the selling is, and a standard deviation around there really acts as barriers for support and resistance zones. Really does an excellent job. If you zoom out and look at the daily chart, you could see that, for example, we've got some overhead resistance here and we're running into it. So yesterday was a great day to see us rally back and to see the VIX get smashed. Today I mentioned that we might have a chop day today, considering all the progress that we made, and still, we're definitely not out of the woods in terms of events. Again, I keep coming back to that it's that the market is usually very choppy around earnings season, and that I think would have left us choppy alone. But we've got just a lot of other events going on. There's still geopolitical stuff that's hitting the headlines every couple of hours. It seems not as bad as it was towards the end of last week, but we still have to. This morning was England. So May was speaking and ruffled some feathers with the European markets this morning, which were down across the board. By the time we even started to get going in the morning, Asia was also down decently. So that'll be in the spotlight, I think, tonight and tomorrow, because we just haven't seen that type of volatility in a long time, where these things have kind of really these markets have moved down decently. You could see for the day. Just to go back to the morning, the pound was up, but the FTSE, the stock market was down 2.5%. The DAX was down 1%. So we'll see if these things recover. There was just a lot of red in Asia last night too, and I don't like that. Particularly Japan did close higher, but China was down decently. So maybe I'm hoping that reverses tonight. We shall see. But besides that, and then this weekend we've got the French election. So so it kind of just brings me to the point, which I kind of hammer all day long, is that, watch individual stock setups. I think, of course you want to be aware of the overall volatility with the market, but, try to ignore some of the noise and work on individual setups and individual stock catalysts. And secondly, don't overtrade this market. It's going to be choppy going forward. I think at least until we get, I keep saying about a third to a halfway through earnings season, then usually we get some open road ahead of us. And then third is watch your position sizes with this. Don't put on too many positions. And again, this is, I'm not giving advice or recommendations or anything like that, but I'm just telling you how I'm managing my portfolio, is not taking on too many position sizes and too much size right now. I'm also, I trade both cash and options. In the option side, really staying away from front month positions. Anything front month, which I consider now May, because Friday is options expiration. I'm really not even sitting with May options. If I am, it's like 10% of the original position that I put on. It's just not worth the risk in this environment. So that's just a little bit about my philosophy. We'll go into just a couple other areas where saw some strength today. Again, we talked about bonds already. This is completely my fault for not pulling the trigger, but we talked about, if I can get the bonds to come up here, we talked about this, after this was moving and just a huge sideways range for a while, a break of this zone and up and away we went. I thought we might actually come back in a little bit, but one of the strongest days I've seen in bonds in a long, long time. TLT was at 1.3%. At one point was up 1.5% today. Just really strong. Gold did not follow today. Was kind of watching that. Gold GLD finished up still 47 basis points. So still, still strong. Thought we might have a little bit of a reversal day yesterday, considering where we opened and where we finished. But really hasn't come in inside of this yellow line, the 5-period exponential moving average. So gold is still above the 200-day moving average, and you could still try along here, and you've got your defined support. So you don't have to be all in stocks. There's other things I think to trade, so don't cut yourself short with that. In terms of sectors, again, it was for the most part of the day, it was a lot of the defensives leading. When bonds are up that much and yields are going down, the utilities, the REITs, they become attractive to investors. Also, the home builders have put together a nice little day today as well, because again, higher rates become a headwind for mortgage rates will go up. So, with rates coming down, I think it's a pretty good area to be in right now. We'll see how this works. So right now we got close to a double top. We need to get over this level here. So I've been long the home builders. It looks like we almost have an MACD crossover here. So I would watch for that. possibly tomorrow, and watch for this high to be taken out. But we haven't seen call buying in this group. We saw a nice call buyer in Toll Brothers yesterday. Toll Brothers looks very close to, again, ITB. Why I use ITB and not XHB. ITB is home construction, but there's actually much more. It's basically is the Homebuilder ETF. There's a lot more. I always do this, and apologize if you've seen me go through this before, but ITB, you could see, for example, has 63% home builders, and XHB, even though that's called the Home Building ETF. Bloomberg is a little bit slow. I apologize. Only has 29%. So you got to be careful. You always have to be careful how an ETF calls. Just because it calls itself something, you always want to look to see at the basket, because it only has 29% of the home builders, and it's called a home building ETF. ITB is the ETF for home builders. That has 63% home builders in the ETF. So anyway, that's an area that's been very strong. I think ITB is up. God, Bloomberg is slow. I don't know what's going on here. And one more click should get us to where I want to see. Year to date, up 17%. So they're the leaders. That's where I want to be in until they break. What else? We saw last week, we saw semis break down a little bit. Notice how they're climbing their way back. So I talked about this a couple different times, how this high volume, while usually high volume signals, confirms a breakdown, every time this SMH ETF has had high volume, it's been a buying opportunity. It's almost like all the weak hands come out of the market, and then you can kind of regroup. So I think as long as it stays above the 100-day moving average, I'm looking for activity in the semi space now. As long as it stays above this 100-day moving average, I think you're good to go, because you can see it's touched this here, not so much here, but maybe down here. It almost touched it. And we got a couple names that are interesting this week. Maxim reports this week. There was a lot of upgrades for that stock, or price increases for that stock. Besides that, I'm just looking at today's performers. Consumer staples are strong. Retail did okay today. A couple names like Coca-Cola looked pretty good today, breaking out above the 200-day moving average. I remain long this name in cash, so that's starting to work out. I got long right around that 200-day moving average, so working out pretty nicely. In terms of option activity today, a couple interesting trades. CBS managed to hit 2 targets on this one. This is the second time I've seen really aggressive option activity in CBS further out. Last time I think it was September calls that went up a couple weeks ago, which I went in and made some nice profits. Managed to get a little bit lucky with this one today. I got in at this one, recognized the chart. Nice uptrend, and every time it seems to be sitting in, kind of where the 2 moving averages meet, it ends up firing back. So there was a rumor literally about 5 minutes after I put the trade on about Verizon. Verizon CEO said he's open to a big merger with another company like CBS or Comcast or Disney. I think they also mentioned as well. So, who knows if they knew something right before they bought those calls. It's all about when you look at these trades, if it agrees with your portfolio, if you like the chart, if it's a good setup, and sometimes you get a little bit lucky as well, which I got today. So, great end of the day trade, and I was able to take a decent portion of that trade off. Also, lumber liquidators. This is another name that I'm long in cash, making just a really nice move above the 200-day moving average. And this was where we saw calls. Literally, I think it was about a week ago. Same time frame, but different strike. August 20s. I think we saw. I forget which strike it was. But same exact month, and lumber liquidators, after coming in for about a week, looks like it's trying to get back to these year highs. A couple other names: Whole Foods, which I think continues to move higher too. There was a longer day to trade out in Whole Foods. Usually when somebody comes in and tries to shake it up, usually the stock reacts pretty well. This was November 34 calls, nice big chunky trade. And then just a lot of earnings trades as well, earnings related trades. I actually deleted one here, but you're going to hear me say this a lot, especially if you're in the trading room. This trade looks aggressive, but they report earnings in 2 days. So it's a lot of just earnings flow where people are either hedging out or maybe doing a little bit of speculation. A couple other trades that caught my eye besides the CBS trade, the Weatherford, a lot of Weatherford traded today. Again, small size, but they've done this before in Weatherford, and it's worked out pretty well for me in the past. I did not take that trade, but I think notable. Again, and this is a name that reports earnings in a little while. When do they report? 427. And then one other trade, because I noticed I've been going on for about 15 minutes now. EWG, Germany. I think this was a notable trade. This went up 10 minutes before the close. EWG is the Germany ETF. Just like I said, Europe was pretty weak this morning. I think it's sitting back on the 50-day moving average. If I would have saw the trade a little bit earlier, I'm already long a European ETF going out. I think I'm going out to January in that. But if you wanted to add on to the trade, they went basically a week after the French election. They went to the April 28th, so they're looking for a short-term move, and maybe these things are getting. I think these European ETFs have come in a little bit because of that election, as well as what all the other things that have been going on around the globe. So I think a good opportunity to buy something on the dip here, and you could use the purple line, the 50-day moving average, as your stop. So so that's it for today, and thanks for watching today's video. Have a great night.